down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
What was my question?
Missed it.
Why do we do this?
Freedom.
Does anybody? Well, no. Why do we have this class?
Networking.
Do we have? Yeah, there's one good reason we have it for networking.
Education.
Just knowing Michael did me a solid the other day on I had to repave a whole a whole parking lot, and I got a great lead. I hired that guy. Thank you so much for that. It's also to learn and to grow from each other. That's why we do this. Even if you're late and you wear a Steelers shirt, and it's a conflict of interest. Anyway, my name is Steven Van Kellenberg. I've written a few books. I have a bunch of prizes today. We got a bunch of content on these jump drives. We got Vina Jones, some audiobooks, and of course the drain. So the prizes are for if you come up with a good question or comment. Okay? Everybody know how we do it? This is interactive. Today we're going to talk about bankers, banking, bank funding, all those fun jazz I think is an awesome topic. I don't know why this place is not packed. I'm confused. Doesn't everybody, who needs money? I need money. I don't think you can have enough money. You can do a lot with money, right? So, does anybody who's never gotten a bank loan before? Not like a loan, not a signature loan, like a commercial loan. Who's never gotten one? Everybody's got a loan here? Okay, anybody has a question about a loan? Commercial loan. Nobody has a commercial about a commercial loan.
What's the difference between commercial loans and residential loans?
Well, it could be an FHA loan, which it could be an individual based solely on your credit and who you are. What's the difference between a commercial loan? It could be a portfolio loan based on your assets. That's kind of a quick definition of the two different types of loans. So which is better? Depends on what?
Is cheaper interest rates. But
The individual loan is cheaper, but can you grow your business fast with a? No. Why? Does anybody know how many loans you can have?
10.
Yeah, they changed it, Dean. You're a little behind.
What?
I heard it was 9. Does anybody really know the answer? FHA allows you to have 9 or 10 on your social security. Anybody know that answer for sure? It used to be 4 about 4 or 5 years ago. Okay. All right. Any other questions? Other questions on that? Okay. Well, I have borrowed a lot of money in my little short time as an investor. And these thoughts on the back of your page, there's some things that we got going on one side of the piece of paper. On the other side is the agenda for today. So I just took a moment and wrote down everything I thought you would ask me or thought that would be a good topic. And so we're just going to go line by line unless you have some better questions, because I just figured we got to get this engagement rolling. So first of all, how many, I'm trying to gauge the room of, I'm trying to think. I've at least gotten, I at least worked with at least over 10 banks. And I've worked with several 10 banks all over the country, not just in Oklahoma City. And these things that I wrote down are based on how I built a relationship with the bank. The biggest question that I get a lot of time, how do you have lunch with a bank? Has anybody had lunch with a bank, a banker? Okay, does anybody know the difference between a vice president, a president, and an assistant vice president? Does anybody know the terms and what those things mean? They mean nothing. They're just titles.
I was one.
Well, normally president means something.
Well, the president.
Yeah.
But you could be a senior vice president, senior president. Okay, all those. So let's talk about the bank structure and how. Now, what I'm talking about from here forward is commercial loans for rental property, and you could also deem them for businesses too. Okay, they're kind of commercial money is commercial money. Okay, so let's just be different. When you go in there and ask for a car loan or even your own personal residence, it's totally different from the loans that we're about to talk about. Everybody clear on that?
Yes.
Okay. So the title, you really want to get to the person that you're dealing with is the person that you want to build a relationship with is the decision maker. So when you apply for a loan, and we're going to go into this real deep, but what happens when you apply for the loan? You fill out a piece of paper, and then what's the next step? You talk to this individual. This person is usually called the vice president of something. It's a title. Are they the decision maker?
It It can be, yeah.
Depends on the.
Not necessarily. What do they have to do after you fill out this application and submit this? What's the next step they have to do?
Take it to committee.
They have to underwrite you. Okay? Now that I'm jumping ahead, can anybody define underwriting?
They check out your credit report, they'll check out your liabilities, your
One word.
assets.
They vet you out.
They vet you out.
They want to make sure. Now, when you go through underwriting, in my mind, now this is just kind of an example. Have you ever been in trouble at school before? Has you ever heard the word jacket before? Or file? Or folder? I got a few of those in my folder.
Permanent record.
Permanent record. Okay? Expunged. Okay, these are terminologies. Well, that's what underwriting is. It is a folder of information that this loan officer, vice president, president, whoever you're talking to, is gathering this information. When do you think this starts?
As soon as you walk in the door and introduce.
Soon as they get wind of who you are.
Use.
Like, people have started files on me before I even applied for. They prospected me and had a file already driven on me. What does he do? How many assets does he have? Is this a person that we can do business with? So you got to keep this in mind. The way you represent yourself from start to finish is extremely important, because what's going on here? They're gathering all this data about you, and then they're going to present this to the committee, or another word would be the board. How often do you think they meet? Does anybody know? How often?
Once a week.
Once a week.
One of mine meets weekly, one of them meets twice a month.
Some meet once. Okay, every bank is different. So if it's a bigger bank, they meet more often. If it's a smaller bank, they meet once a month. And so you got to be, if you're trying to close a deal relatively fast, you kind of need to know that, right? Because what happens is it has to go through what? Committee or through the board. So you got to pay attention to that. All right. So here's some key points on here. Any other questions so far? All this is anybody? Okay, here we go. First of all, to really have your banker fall in love with you, you need to understand what credit is. Can anybody answer for a prize? What's the 5 C's? 5 C's. Anybody want to try the 5 C's? If you want to get money, you're going to have to know the 5 C's. Like, y'all need to write, Google, get your freaking phone out. Google it up. That's what my son, my child says. Okay, Google. Like, they don't even know what a dictionary is. They just know, okay, Google. Like, they'll stand at the little screen. Okay, Google, what's the 5 C's for underwriting, banking? Anybody want to shoot them out? Get your pen out. Do you need a pen, sir? You've been staring at me like something's wrong. You all right?
Okay.
Character, capacity, capital.
All right, let's start off with and there's actually 2 more. Just so we might get into that if we got time. Character. What's the next one?
Capacity.
Capacity.
Capital.
Capital.
Conditions.
Conditions.
Collateral.
Collateral. Okay. Now, I loan money. My favorite is which one? Collateral. I don't care who you are. Now, the cool thing is, this is just a basic policy of a banker learning to loan you money. They're going to check your character. Are you payable? Can you pay it back? Are you integrity? How do they deem that? Through a referral, and that's not even bona fide. Capital or capacity. Can you handle this asset that you're buying? If it goes haywire, can you pay it back? Do you have the capacity? Do you have other assets that you could leverage with that, or they can acquire them? Do you have enough capital? This is where I see a lot of young investors that are trying to get money, and they don't have reserves. And now keep in mind, your tax return may not have any income on it. Has that happened to anybody before? That's never happened to you. You've made money every time. You got the wrong account. Are you serious?
I just quit in December.
Oh, okay.
My job. My wife and I.
All right, you're a variable. We'll fire you. All right. So, but normally a big problem that people have as real estate investors are trying to get commercial loans is like they don't have any income because they take a ton of losses, right? And there's this thing called depreciation that goes against their income. Okay. So to combat that, now it depends on a really good banker that's familiar with real estate already understands that, and he has a formula that he works back to figure out what that number would be, minus the depreciation and so forth. Okay, but one trick is capital. The best time to borrow money is when you don't need it, and never come across that you need the capital. So when I'm talking to a bank, I'm just saying, hey, when I'm calling on a bank or I'm interviewing a bank or they're interviewing me, it's just like a casual relationship to me. I don't know if I could work with you, and I don't know if you can work with me. It's not an arrogance thing. It's just like a casual relationship. You know, even though I'm raging inside, I'm about to close this apartment building and I need this money, but I'm acting like I don't need it. Okay? They can figure that out real quickly if you are desperate. And no one will ever loan you money when you're desperate, except for a hard money loan, I guess. All right, capital. So does anybody know what a good ratio of capital is? How much capital should you have in a bank? Is there a ratio?
If there is, I haven't encountered it yet.
Mm-hmm. Anybody want to try? Nobody wants any prizes? I really don't know. But I believe that there is a ratio somewhere. Like I learned this a long time ago with a bank. Whatever the investor says, we just cut it down 20%. It's just a natural, just a ratio that they do. When they look at your cash flow statement, they're like, there's something, we just cut it off. Just see if something ever happened, if you got hurt or you fired your property manager. We try to run our internal numbers on 80%. Okay, so what would that mean? I would say I would have an overall of at least 20% of cash to mitigate that. Does that make sense? To go against what they're thinking would be a good scenario. Condition. What was the fourth one? Conditional. Okay, I guess that would be terms, and then ultimately the collateral. So these all five things are not necessarily all in order, and each bank or banker looks at them differently. So you'll get some bankers that will hate apartments and love apartments. Like I just talked to a bank the other day. They did some single family. They have one of my apartments, and then she's like, I've been sending her some investors, and she's like, we don't do those anymore. We only want to do commercial stuff. This happened to me with a credit union. They opened up commercial, and then I did a bunch of refis over there. And then when I went, 5 years later, I went in there to do a refi. Oh, we don't do commercial anymore. They just shut it down. So, depending on what type of collateral it is. Okay. Any questions so far? Is this helpful?
Yes.
Okay. Because everyone's staring at me like I'm in trouble. Because I am. I just threw this up here. I thought we'd be a little bit more engaging. Know your ratios. Anybody know what type of ratios are? There's a ratio for a price.
Debt coverage ratio.
Okay, that's the acronym for it?
For debt coverage ratio?
Yeah,
CR, I would assume.
DCR ratio, right? Does anybody know what that ratio is? 1 point.
Oh, well, that depends on the bank.
1.93.
1.25 to
1.25.
depending on the bank.
Who does one more? 1.25 is what I see all the time. So, won't you explain debt coverage ratio? Can you try for a price? Because I don't want to take the show over all day here. This is not my time. This is your time.
The ratio of money you have coming in, your gross cash flow versus the cost of all your bills. They want to make sure that if you're going to pay them $100 a month, that you're at least making $125 a month before all of your expenses come out.
All right, so let's break this down. So let's do an example on one rental property on a DCR. DRC, debt ratio coverage.
Math in my head isn't my strongest suit, so I'm gonna try some.
Andy, you want to do it for me?
Some other numbers, but
who likes this part
normally
of it?
it's the annualized.
Huh? Okay, go ahead, April. Explain debt ratio coverage, or is it DCR or DCR?
DSCR.
Debt ratio coverage. So you're
We gotta learn
how
this.
much of your debt you have income for? Is that what you're saying? Like, say you have $1,000 in
So, like,
debt, but you
a bet-
$2,000 in income,
so-
that's going to be 2 is your coverage.
Well, what I'm trying to explain is a typical commercial lender, not all of them, this is one bank that I work with a lot. They will get your portfolio, they'll see your cash flow statement, and they'll make one calculation right there, right then, and they'll know if they can loan to you, and it's based on DCR. This is just one bank.
So
Now-
it's your income divided by how
Okay,
much debt.
let's write this out, everybody. Get pens out. Income divided by
How much debt you have.
debt.
So they're basically saying, of all the income you have, this is how much of it is debt.
Okay, so let's just do an example. $100,000 in income divided by, if I owe $50,000, okay, that would give me 50, which would be 0.5. And the ratio that you're trying to get to is what? 1.25.
That'd be 2. Point.
Well,
Yeah.
it would be 2 divided. It's 50 divided into 100, which would be 2. So your DCR would be off the charts in this case. So would they loan you money on this?
Yeah.
Okay. Now, my portfolio, to be a conservative investor, I run between 50% and 65% debt ratio on my portfolio. That's just how I've always done it. I try to buy every house at 70%, but I see a lot of young investors and they can't cash flow, so they'll just leverage out and they'll be at 80%. So let's we got enough time here. It's early. Let's work out the ratios and see what the percentage is, and so you can see what the rate. So what would it be? So that's 50% would be 2 points, right?
Yep.
Let's just say you owe. Let's jump it to 70,000. That would leave you with 30,000. What would that be? So that would be 3 divided into 100, right? Calculator.
3 into 10, but
3 into 10. You get the
30
point, buddy.
versus-
You're not getting a prize,
1.42.
homie.
1.42.
Didn't get me
Okay,
looking up the 5 C's either.
Yes, you do. Which one do you want? 1 point. Is that right?
1.42.
4.
Would be
2.
the DSCR.
So 1.42 is 70% overall. 2.0 is 50%.
Yep.
Okay. Now let's do $80,000. What would that be? And yes,
Quarter.
1.25. Okay. Now that's a standard for a bank, 80% of value, ARV per se of your overall. So when you're looking at buying a whole package of properties, can you figure this out? It's the income divided by the debt, and that comes out to, who said there was 1.25? That's where I see a lot is 80% to, what was the other number? 1.93.
1.93.
1.9. That's high, because
I have one bank that likes 1.5, but we're now talking about what I think is 2 different things.
Yeah.
The debt coverage versus the loan to value. Because the price of the property versus the amount of
Well,
debt
I'm
you-
just using that as an example. If you say your overall portfolio is worth $1 million, and you have $600,000 worth of debt on it,
you're at a 60%
LTV.
LTV.
It
But-
depends on the terms of your loans as to how much of your, in my experience, they're looking at an annual rents for the property
Yes.
versus the annual debt that you have to pay. So your taxes, insurance, property management, principal and interest.
See, some banks don't even add in. There's another ratio. Does anybody know what that ratio is? Hey, I'm not the expert here. I just want to make sure we're all clear. I just want to be the facilitator. That's my job today. There's another ratio. Do you know what it is? That does not add all that in there. It's just the DCR that I'm aware of, that I'm thinking, I could be wrong, is based on the debt that you owe and the gross rents that you have coming in to pay for the debt that you have. But it doesn't calculate, because like on your tax return, you could be taking a loss, but you can still get a loan because of your debt ratio,
DSCR. Yeah.
your DCR,
Mine
which
looks
they
like
don't
that.
equate to like repairs and maintenance.
Well, I didn't include, taxes, insurance, my bank uses taxes, insurance, principal and interest.
Okay.
They don't add my repair budget, my vacancy budget. It's just the bills that I'm for sure going to have to pay.
Mhm.
And on a multifamily that's all bills paid, they actually include the average
Utilities.
the utility cost for that one as
Okay.
well.
All right. Of course, I muddled all that up. So, any questions on that?
One bank that I use, that's what they're looking for, is at least 1.9.
That's just like the banks that I deal with are 1.25, but I could be doing my calculation wrong.
It's typically a 1.2 or 1.25. I've got some projects that if it goes under 1.25 for a number of months, they'll require you to deposit funds into an escrow account to compensate for going below that ceiling, and it's a 1.2.
Okay. Yeah, I've had a bank get all up in arms when I dipped down during a certain transition in buying assets, and they required me to collateralize something else at that time.
And
Okay.
it's real important when you're negotiating for your loan terms. Most people are oblivious to this, and you should try to negotiate in your loan terms for a 1 point.
As origination?
No, is the
Oh, for the
DSCR.
terms?
Because if you ever dip because of.
What if you're at 68, 70% of
Yeah,
short
I mean,
term?
if you dip down to 60% because of the conditions, road closing or something else. In other words, it's just, you can, if you don't get it if you don't ask for it. That's my point.
Or if you had a fire.
Right. So most banks, it's just standard operating procedure, and for you to come up and say, hey, I can get 1.2 over here at ABC Bank, they're gonna go, oh, well, what do you wanna do? Well, I wanna go at 1.0. Okay, fine.
Okay.
They won't change it if you don't ask.
It's a good tip. I like that.
100% financing essentially, is that what you're saying with that percentage?
Well,
When you bring it to, like 1.25 would be
90.
80% of value.
Are you 90? Because 1.25 is 80 of value.
Right, that's what I'm saying, so he's.
So
he's
1.1
basically able to-
1.1.
Is 100% financed.
One even, right. So
Well,
that's essentially
there's
what you're-
loan to value and the income, because the debt coverage ratio that my banks use is an income thing. It has nothing to do with the actual value of the property. My banker, the one that I'm thinking of for my multifamily I bought in Yukon, the property appraises for X, they will only loan up to 75% of that number, whatever it is. And then they take the principal and interest for that loan and say, your gross rents are, $5,000 a month, $60,000 a year, and paying back this loan, and in that case, the utilities, insurance, and the taxes on those properties, whatever that number is, and we're gonna say it's 40,000, so we're at approximately 1.4% on that.
I have a question on this bank. They said they were only going to loan 75% of, was the contract
The appraised,
value?
the
So it
appraised
was
value.
ARV.
Mhm.
So it didn't matter what you had in our contract for?
And that one they did.
It's a good bank.
Bank First Yukon.
Bank First? Good luck with Bank First. I'm not saying Bank First is bad. Just that's another question that you need to know when you're going in and getting a loan. Do they loan you on the contract price and what the percentage is on that, or do they loan you on the ARV, which is the appraised price? So that I think that's a problem that a lot of people think that they can't get in real estate, because like if they loan on the contract price and you bought a $100,000 house for $50,000, you got it under contract because it needs repairs, let's say, then some banks will only loan you 80% of the $50,000.
right.
So before you even have a conversation, I wouldn't blatantly come out and say, "Hey, man, do you do it on ARV?" You can, if you really don't care, but you really need to know that number. I mean, their policy: do they loan on ARV or do they loan on the contract price? Has anybody run into that? John, he's just this funny.
Just a story. I had
He's
a
like,
large
"Yes, I
bank-
died."
I had a large bank courting me for like 3 months,
Mhm.
saying, hey, we want your business. We want to do this, we want to do this. Okay. I finally said, I'm not giving you any financials until we get down here and get to the point to where I need a deal. I needed a deal, and they did that exact same thing. Well, what's your contract? I said, this is what it is. But I said, that contract is 70% of the ARV. Well, they said, well, you're going to have to pay the difference. We're only going to give you 80% of that 70%.
And so he's saying this actually happened to me on a large commercial deal where the loan officer forgot to order the appraisal. And didn't forget, like ordered it late. And I was like, we have to close on this certain date. And he told me that up front that it was going to be off of ARV. But since the appraisal did not come in on time, we're going to do it on the contract price. So that's where that throws it off too. They court you to, and then you're committed to them, and then you have to come up to closing. And that was a position that I was in. I was like, I either going to lose this deal or I'm going to have to bring 20% to the table. Thank goodness for this thing called private money. Another thing that I do too, two tips for you. Number one, I don't give anyone my social security number unless I'm going to pull the trigger. So even on my financial statement or my taxes, I'll even give them my taxes and I'll black out my social security number. Now, when I know that I'm going to do business with this individual, then I'll give them my social security number. Because even on my financial statement, I won't have my social security number on there. If they ask me for it, I'll give it to them. I'm not trying to hide it. But I just don't want people to be pulling my credit score, and I don't know where those loan documents are. And if they're a rookie loan officer, it could be on their desk. And I've been in offices where I've seen people's social security number on someone's desk. So I'm not saying that they're trying to do it on purpose, but just as a tip that I would recommend, I try to guard my social security number as much as possible. But in today's technology, I don't know. Another thing I do is I do not give the bank the contract unless they beg me for it. I'll fill out the application, I'll submit every single document that they need, and there is a few banks that don't even care about it. They do everything based on the appraisal. I tried to buy an REO the other day, and I'm back and forth with this gal, and we're negotiating, and she kept pointing to the appraisal. I'm like, your appraisal's off. Let me tell you, it's way off. How could this needs all these repairs? Like I had pictures, there was termite damage so bad, but this is her response. It's not on the appraiser. Well, you better call that dude back out here, because these are tunnels. You ever heard of tunnels? It's going to cost me $4,000 or $5,000 to fix this, and basically she came across saying my hands are tied, because it was only based on the appraisal. Okay, so also be aware of that too. Sometimes appraisals could sting you, but I'd rather be based on an appraisal, because if the appraisal is low, maybe I don't know what I'm doing, and I trust the appraiser way greater than me getting it under contract. And I don't want to give the bank the contract unless, and I'm not ashamed of, but I don't want them to start thinking, well, what is he doing? Why is he buying this $100,000 house for $50,000? And I've seen where I've gotten penalized because I'm a good negotiator, and the banks feel uncomfortable with that. And it's a rare environment, but yeah.
The other thing is when you're negotiating on a deal, if it's a skinny deal and you're going for an appraisal, what you want to do is make sure you itemize the items that you're going to do to approve that residence before the appraiser gets it.
Great tip. Man, I should bring you around more often. It's my bouncer. What he said is very variable, very, very powerful, very valuable. Every time I actually get a loan, and I see you do this all the time too, I submit what I'm going to do to the repairs of the property with pictures, exactly what I'm going to do, what it's going to cost me, and they usually will fund that for me.
Retail value of what you're going to
Yes, retail value. So if we put a fence up, I might be able to get the fence done for $1,200, but just in case my great handyman fence guy disappears tomorrow and I need to call the #1 Acme Fence in Oklahoma City, it's going to be $2,500. I can get it done for $1,200 with this guy. I'm going to put, what price am I going to put on there? $2,500.
Well, it also gives you flexibility in your appraisal.
Yes.
If you're putting in for $20,000 of repairs and you can get it done for $15,000, give the $20,000 to the appraiser. He'll probably only give you $15,000 anyway.
And that's a good point too. And also, when you're getting in, if you know this is a massive rehab, does it help the appraiser to give you what? Now, do you factor those repairs in there?
I mean, we want to see every detail that you're going to do to it. Absolutely. Now, some things, like kitchen and baths are definitely the strongest. But there's going to be some things that you'll spend money on that you won't ever get back. So I think that's where you got to be careful
With what you submit?
Looking at what's in the neighborhood, first.
Okay.
To figure out what you're going to do as far as repairs go or for updates. But
Awesome. Hey, great dialect. Good job, Michael. You get a prize.
Great.
You get this. This looks like this needs to be in. It looks like you own a CD player somewhere.
It's a new workout program. A tale of how to work out like Steven. Okay, great.
You silly. All right. Here's just some basic things. We only did number 2, which I screwed number 2 up. So let's go into number 3. Decide on a bank loan amount. I see this. You need to know exactly how much money you want to borrow. Do not try to go back to a bank and ask for more money. I'd rather ask for as much money as possible and not take it. Has anybody ever done that before? On this building you're sitting in, I have a $100,000 line of credit against this, and I never touched it, but just in case I needed it, and I have it sitting there. So it looks like you know what you're doing, and I always play this role. Hey, I'm just in case I need it. That's why I have it there. And sometimes banks are not real keen on that. They don't like that, but I put that in the deal because just in case I needed to float this for a certain length of time. So decide exactly on what you need. Yes?
I cannot stress how important it is to have a line of credit.
Yes.
No matter how many deals you've got to have a safe haven, or it can totally collapse your whole organization.
So I would put that down there. Action steps. Number 1, figure out how am I going to get a line of credit.
Doesn't mean you're going to use it.
Everyone should have a line of credit somewhere on something. It might even be advantageous for you to have a property or 2 or 3 or 10 paid off and have a line of credit on those. Even though you're going to flip-flop the debt somewhere else, you can put a base line of credit on there that you have access to that money if necessary. Maybe we probably don't have enough time to cover that, but we can circle back on line of credit, how important it is to have a line of credit. Man, it looks like you got all the prizes, homie. So we're on number 2. Okay, determine the type of loan you will need. Okay, so now we've determined that there's commercial money, right? But there's also another type of loan that you could get called construction loan, right? And so there's a bank, First Liberty Bank on May. They're somewhat friendly real estate investor bank, but they can do it. You could do a no money down there. There's several banks that you could do no money down deals, but that bank, I've seen this happen several times, where you can get a loan for the acquisition, and then you can get another loan for the construction, which is totally different terms, but it's under the same address, and that's how you can do a no money down deal. So you got to understand what type of loan that you're looking for. Okay, so everybody understand that. So that's just a technique that you could use. Do you have a question?
Well, hey, I was going to tell you, my banker at First Liberty just told me the government rolled out a new thing though, that you can get an investment loan with a fixed interest rate. It's a little bit higher, but based on
That's
cash
perfect.
flow. It's based on cash flow.
That's
though.
great. Let me tell you about this loan she's talking about.
Yeah.
It's gangster. They have a bunch of penalties in that loan.
Yeah.
So that's another thing you got to keep in mind. They're all trying to sell that loan right now.
Yeah.
But if you touch that loan for 10 years, you're severely penalized. So like a prepaid penalty, that loan that she's talking about, it's a 30-year AM. It sounds sexy and it's wonderful. I'm telling you, I don't even know what I'm going to do 6 months from now. And I used to not think this way. Even I wrote the book and I said, never sell an asset. Someone asked me the other day, why are you selling this house? And I'm like, this is my homie. I don't know how to articulate this. Like, he needs to be buying houses, but I need to be selling them at this point in junction in my life. Okay? So, but when you get a loan like what she's talking about, because there's an investor just did like a $2 million deal like that. So you were looking at a loan like this, weren't you looking? We had a whole lunch on this exact conversation. It sounds attractive. You can get a bunch of cash, but the market's going to change. I don't think it's going to change dramatically in Oklahoma City. But what if you had another opportunity that you wanted to buy a bigger strip center or an apartment, or you needed to do a 1031 exchange, or you wanted to buy a new business and you need to refinance, you will get stung on that deal.
On that deal, you cannot sell that property until the last 6 months of that 10 years. You cannot refinance that property. It's what it's called a defeasance penalty. I had like 3 of these things, and we had to hold them till 9.5 years. But on the 8th year, just the defeasance penalty on each loan was $1.5 million.
Yeah, and it's like
you can't go back and get a second mortgage to do a repair or anything.
And there's a thing called cash flow poor at the time, or you've got all your money all everywhere, and something you need to put a roof on, and you're trapped. I'm not saying this is not a bad vehicle, but I would definitely diversify and how you're gonna, and know that these are the ones that you're gonna like go to the ends of the earth. And you just got to keep in mind, it's, to me, these loans that they're rolling out are like extreme hard money loans to me. They're just like what they're not advantageous. You're not flexible. It sounds attractive because you're on a 30-year AM. That's like the ideal loan, but in reality, you're going to pay it all back anyway. So you might as well go with a loan that you're going to have a 5-year fix with a balloon that you can have flexibility and get in and get out, refinance, or move down the line, and there's no prepaid penalty.
Stephen, one thing though, I had a loan quoted for $10 million,
right,
at 3.9% on that 10-year.
Right, and you got $2 million in cash.
Yeah, and so if you can make the project work on a Fannie Mae or Freddie Mac loan, and you don't need any funds out of it, it's a great deal because the interest rate is right now, it's unbelievable.
And you just have to just put the pen to the paper and figure out what worst case scenario, if I needed to buy this out or move it out, what would my penalty be?
That was my question, is what do we need to be asking the lender, because I'm looking at refinancing 3 right now.
Is it a local lender?
No.
It's a nationwide.
It's
The nationwide ones are the ones you need to be leery of.
10 and 30-year fixed.
Right.
And so I'm wondering if this falls under that category.
I guarantee you need to get the term sheet up front. I mean, that's a common thing. Everybody should ask that question. When you're getting a loan and they say we're going to do 5%, we're going to do an AM, like proper real estate investment business acumen is this. Can you send me a term sheet, please? I'm telling you, I see so many investors get into a deal, they get a yes from a bank, and then that banker changes his mind. But when you have a term sheet, it's just, you could use that term sheet to go to another bank, and that's what I do. I take that term sheet and I'm like, can you beat this? Can you match? I want to build a relationship with you. This is what they're offering, and it's in writing. Because you could say anything. You could say they're offering me 3%, and the banker's going to laugh at you because they know they base it off on the Fed. But on your loan, I mean that I'm a bunch of investors are sending me these documents that I'm looking at. And I'm like, wow, and they're getting more and more unique. They're like, a regular bank, local bank is kind of standardized. There'll be a little bit, maybe origination fee. There'll be some different points and stuff. There'll be different things that will, maybe massage the loan, like half a point for origination. Or I saw 2 point, didn't you get a quarter for origination the other day? I'm like, I haven't seen that in a long time. The banks are very aggressive, and I think they're flooding the market. I would just find out what my prepaid penalty is, if there is one, and try to get one without one. If it is, typical prepaid that I'm comfortable with is 2 years, because it usually takes you 12 months just to get acclimated what's going on if you got a rehab, and then it takes you 12 months after that, kind of stabilize the property, cash flow, you know what's going on. So 24 months on a prepaid penalty is pretty typical in general, okay? But anything that goes on from there, like I've seen 3, I've seen 5, okay, but the interest rate is a lot lower, and it could be a 25-year AM. Yeah, I'll do a 5-year. But I've seen 10 years with this crazy low interest rate, and they have all these back end points that they're going to charge you if you, and it's just crazy, and it's all confusion.
Okay, that term sheet that you get is worthless if it's not signed.
Right.
And they're telling you, here's what you've got 90 days. A lot of the times you'll get a project, and typically, if you're looking at $500,000 or more and you're doing a bunch of properties, you make sure you've got that on there. If you've got just your 3 banks are all sending you an email, here are your terms, it's worthless. You need
Now, heads up on the term sheet too. I was in a deal, whatever, a couple of years ago when the interest rates were going all up and down, and it was all over the news, and it just skyrocketed by 2 points within a short amount of time. My term sheet saved me. They honored what the original term sheet was. So it's better to get that information in kind of in your hands. So if it does go up, if it goes down, that's fine. Who cares, right? But so at least you have some stability, so you can at least run your numbers on that. Any questions so far? Okay, the next one is no terms. So we're throwing out terms right now. You got to know what I don't want to give you my philosophy on terms, but what's standard out there right now? Let's start there. What you just got a loan?
Yeah, that one is prime rate plus 2. I
Okay,
believe.
so explain prime rates, people.
The feds put out what's the prime mortgage rate.
What is it like? What is the prime rate right now?
The 10-year is probably at 1.55.
Okay. So you're telling me prime plus 2, so it's 1.55 plus 2, so you're going to get an interest rate of 3.55 on a commercial loan?
Well,
What crack is that?
it wasn't this year. It was last year.
Oh, okay.
And so my loan is at 4.5.
I was like, where's that at? Sounds like a drug deal.
Yeah.
Commercial or?
It's commercial.
It's possible.
10-year treasuries at 1.56.
So we already bumped up 1.56. So you can Google the rate, the Fed rate, and that's how banks kind of set the standard of what their interest rate is. Now some banks do 1.5, some people do 2. It's pretty common, and then from hard money and different types of money it goes up from there. So that's the standard. Now, what kind of terms? What's a comfortable terms? You got a loan before? What's the terms you have on a loan? Somebody whip out a loan. 15-year AM. Everybody know what an AM is? How long it takes to pay the loan off. Okay, is there a balloon in there?
5-year.
5-year balloon.
Most of mine are 515s.
515s. Now, raise your hand if you don't know what we're talking about so we can help you. Okay, good. See, like, finally we got some humans in here. Everybody's like, okay, so 5 years means that you, after 5 years, now, let's see if we'll give it out a prize. That means you have to decide on what you're going to do with the loan. You're going to have to basically, let's just say it's $100,000. In that 5 years, you pay down $10,000 worth of principal. You owe $90,000 in 5 years. This is just fake numbers. After this 5-year term or 5-year balloon, that means it's due. What usually happens? You have to refi. Now, some banks will just, there's another word, renew.
Yep. Renew, adjust.
And so you can get stung in this situation. Now, why do you think banks do this? Does anybody want to answer this one?
Because the
Everyone
interest
wants
rates
Not
go
you.
up and down.
Rate.
Interest rates go up and down.
Well, they could lose money,
Yeah.
right? Is that what we were going to say?
No.
What were we going to say?
You told me to shut up. I'm not going to talk. I had something really good for
Hey, man,
everybody.
because you got big muscles don't mean you can
Okay.
take over to everybody.
With a 5-year balloon,
Uh-huh.
whether it be a 10, 15, 25, always negotiate, and you can do
Yes.
this up front.
That's awesome.
That loan will renew at the end of 5 years without a new appraisal, without any cost other than just renewing the loan in a note. If you'll put that into your loan documents, that note will then just automatically renew. You'll come in and sign it and renew it for another 5 years, because that meets their Fed regs.
Okay. So what's happening is why does this happen? Because it sounds scary. Why wouldn't you do a fixed rate? Well, our government, our country is based on mortgages. That's how our economy functions. And when it's a 30-year fixed rate, they can kind of gauge of what's going on with the economy. Now, when banks are trying to make a profit, as much money as possible, like everybody else, they don't want to be trapped at that certain rate, because if the rate goes up or down, they can get hurt. That's why that needs to happen. But here's the thing you got to realize. The bank doesn't want to call your loan up. They want you to renew their loan. Okay, so you got to have a relation. Now, you're going to turn in financials at this point in time, and let's just say you took a lot of losses or you had a divorce and something massively happened in your world, and you have no cash flow and you're negative and you're behind on 10 properties. What's going to happen? Are they going to renew you? No. Okay, so you gotta have to be on top. Like, a lot of people are scared of balloons. It's not necessarily a negative or a bad thing. It's just the nature of the business. And you got to understand, you got to plan and prepare, or what are you going to do when this happens? But, I have a renewal today that I have to go sign. Like, hey, your loan's up, and this is what, and they say, this is your new rate. Your principal will, if it's a lower rate, your principal will just go down. But usually your payment doesn't change, but your balloon does. Okay, but they have to do all the paperwork. That's the greatest tip I've ever heard. I learned that from Michael. Is that what happened was some banks don't even charge you for renewals. But there was another bank I mentioned earlier. I don't want to say the name again. First Liberty. They charge you a referral fee, a cost to do the loan. So how irritated? What if you had a bunch of loans, like 10 loans, and they charge you $250? You're paying $2,500. Who are you working for now? How much cash flow is that? Could you lose $2,500 that month? It could, if you only have a few, 10 houses. Let's just say you're cash flowing $200 a house. That's you work for free for a month and a half. Okay, so be prepared and ask them when you're getting a loan, what happens after the 5-year balloon. Now, there's loans that I have that are 3-year, 5-year, 10-year, 15, 20-year balloons. Now, you will see 3 years out there. It does sound scary. What they'll do is some banks will do. I'll do a 3-year with you because they're trying to shift money around, and they may do a lower interest rate for the short amount of time. And I've seen them do a 5-year. If I want to do 5-year, they're going to charge me 1/4 point extra on interest rates. Does anybody see that, or is that the only bank that I deal with? Okay. Okay. So you just need to know what your terms are. What are you looking for?
Can I say one other
yes,
thing?
sir.
Stephen pointed out you want to ask them at the time you're doing that loan if this is a process. No, you don't want to ask them. You want to tell them this is what that you have to have because this is what the other lenders are out offering to you. Go in there strong, but pleasant and assertive.
So here's just my opinion on knowing terms. If you're a new investor and you're just starting out, okay, I think this is going to happen to you. Do not try to cash flow on a 30-year AM. Okay, if you just cash flow okay on a 30-year AM, like you're only making $50, $100 a month, when the market shifts, you're gonna go under. Okay, and you need to, how I do it today, and I've been doing it this way for 20 years. And I'll probably die doing it this way. This is how I run my numbers. I get my financial calculator out. I do the principal amount, 6% interest at 15-year AM. If I can get a 20-year AM, now when I do commercial, it's a little bit different because the numbers are a little much bigger. But if it cash flows well, it's got to be, there's a ratio. It's got to be 1.5 or 1.25 depending on location. So when I look at an asset, it's structure, location, and cash flow. Those are the 3 things that I look at. Structure, location, and cash flow. If I can cash flow decent, and it's a good structure, and it meets with all them, and it runs at 6% interest rate, 15-year AM, I know I'm going to be completely safe on that property. If I have to refinance, or if the market changes, or things happen, I lose 4 months of rent, I will come out okay. Okay, this is the ratio that I've been running for 20 years. So know your terms, and you can negotiate terms with the bank. I know the guy behind the gal behind the desk has a suit on, and they're sophisticated, and you're dying, and you're desperate, and you want to buy an asset because they said that you're going to be rich if you buy an asset. Listen, you don't have to be fear of these people. They need you as much as you need them. Okay, doesn't matter what you look like. It's all based on those 5 C's, basically. It's collateralized. You can negotiate your terms. It's kind of fun. You can do it. Some banks will just come across stern, like this is how we do business. That's not necessarily true. Every bank is different, and you can negotiate with the bank. I just want you to understand that. You need to understand, because for many years in the beginning, I just said, okay. And I didn't know about that renewal fee. For about 10 years, I did not know about that renewal. When I renewed, because this bank that I was working with was a great bank, and they would just automatically renew it for me. They would call me and say, what do you want to do? I'm like, nothing. I just want to keep making money, homie. And then one time, another bank said, hey, what do you want to do? And then there was it was costing me this much money. They wanted to order an appraisal. And I was like, whoa. Aren't you in a safe position by now? I've paid down all this equity by now. The market has gone up by 20%. Have you ever heard of Oklahoma City? It's on fire. Why? But that's a policy that they have. If I would have known that and I was stuck, and then when I beat up that banker, I was like, hey, this is not how all these other banks are doing it. Well, that's how blank wrote it up. That's the banker before this guy. He's just doing his job. If I would have known what you guys have learned today on that, just know that you know what's going to happen in 5 years. You'll be way ahead of even majority of everyone that's trying to do loans. Okay. Decide where do you want to build a relationship with this bank and how you borrow money. And so I'm working with a guy right now. He's a phenomenal investor. He's got 50 units. Okay, he's never borrowed money from a bank. He's a very unique individual. And I was like, hey man, for you to scale, you need to start using bank money. And so we finally got some bank funding going, and he actually has 2 banks going at the same time. on half of his portfolio. One on this side, this on the side. It's interesting because at the same time, they're all approaching him differently. And so you've got to decide on who you want to build a relationship with. Because he asked me he was asking these questions today, and I was like, well, it depends on if you want to go on a long distance relationship with these people, and because they were trying to, I can't remember exactly what he was asking me, but they wanted to collateralize more property. Like they weren't, like he was refinancing like 10 of them, and they wanted 10 plus 2 as collateral. Whoa. No. What? Why? There's no need to. These already stand alone. And but see, if just like you as an investor, are you going to ask for the washer and dryer in the negotiation? Absolutely. I'm going to ask for everything, right? So just like a banker, they think like us too. No, they don't. But they think differently in some way, but they're going to ask for it if they can get it. And I would say, I don't know, why are you asking that? I may collateralize that somewhere else. But the other bank didn't ask that on those assets. So now, is that the bank I want to build relationships with? Now he's already 90% down the line on this loan. They're about to close the loan, and then they ask that at the last minute. He asked me that question. That was the question. Is that normal? Not necessarily. Has it happened to me before? Yes. Where they crunched the numbers and my cash flow didn't seem perfect. Like the world's going to end tomorrow. We just want to be secure. And so you can fight that stuff, but you need to know who you want to do business with. And so if I was you and you're new to this, I would find out with the people in this room after we're done here in 8 minutes, and at what banks, we're ask Jason later, ask Jay later, like what bank is he talking about? And is that a bank that you want to do business with? And are you happy with that bank? And what do they do right or wrong? Like that First Liberty Bank, it's not that I'm against that bank, but the way they treated me on the renewal was like, man, you're making a ton of money on me. I want to keep this rolling. They basically forced me to renew it somewhere else, and I did because the way they treated me. But it was a new bank loan officer, and I was like, okay, buddy, I need to build a relationship with a new bank anyway. You're doing me a solid anyway, and I got equity out when I moved the bank and when I moved those loans to somewhere else. So think about that when you're doing it. Everybody know what an ARM is? Okay, what is an ARM? Just remark. Are they still functional? Yes. Do you know how the whole economy collapsed before? What was the whole reason behind that? Derivatives, all that stuff. That stuff's no doc loans. Okay, that's happening today. Just want you to be clear, and it's just in a different, like we'll give you 3% and 30-year AM. That's like a no doc loan in my mind. Like there's no skin in the game, but the penalties are so high. And actually, that's another day. But there was a deal that I was involved in where we paid on time and everything went well, but they had such a severe prepaid penalty in there, we couldn't refinance out, and it just became a disaster of a loan. It just handcuffs you. So know your penalties. Okay, so when you apply for a loan, put everything on your financial statement. Some people don't put their cars on there, and a bank's going to question you on that. Why don't you put your car on there? Okay, you don't need to put that on your financial statement as a business. Remember, you keep your business separate than your personal, but they're going to ask you about this stuff, and don't omit anything. Put as much as you can on there. Even if it's a broken down Chevy that's worth $5,000, I'd put it on there. Okay, try not to hide anything, because you don't want the banker to ask you any questions. Because when they start asking questions, it changes the relationship. Okay, there's the loan application process. So we covered that earlier. So what happens? You fill out an application, they start underwriting you, they're building a relationship. They think about the 5 C's. Are you all these things? Then they start doing underwriting. Here's the interesting thing about underwriting. And here's a couple tips that you should do. Like my man is in concrete. Okay? You should let them know if you have a side hustle too. It makes the relationship even stronger. So when I was looking for a loan, yes, I told them that I'm an author of a book. Yes, I do real estate. I teach people real estate. It just sets the tone, and they actually write it down and they put it in the file. So when they go and I'm asking for $1 million, oh yeah, this guy teaches classes on real estate. They're in the boardroom talking about me, about what I'm doing. They're going to do the same thing about you. So if you have restaurant experience or whatever the case, but whatever's going to benefit you in the loan, I would try to not come out and just email the guy, hey, also a resume. I don't know, I would do a credibility kit, but I would also just drop, when you're having a relationship or you're having a meeting with this individual, drop things like your history, where you came from, maybe your schooling, maybe tech classes that you're an expert in construction. I would not tell them, I've never rehabbed a house before, would you give me a loan? Or my favorite is, every bank's going to ask you this one question. What's your goals? Well, I want to do no money down. I read this book called This Bank, and this says I could buy every house. I could be rich tomorrow with no money down. That bank's going to deny you. You need to be like really conservative. Like even like I want to take down, I'm raging inside. I want to take down 10 houses a month. I'm going to say, and I'm going to talk their language. I'm going to say, yeah, I'm thinking about maybe acquiring 1 or 2 assets this quarter or next quarter. See, that's how they think. That's how they talk. They think in quarters. They think in monthly terms. They have deadlines. They have quotas. They have to do an underwriting. And the thing is, you got to keep in mind, just like a real estate transaction, you may have a good realtor, but the realtor on the other side may be a pansy, right? And if this realtor doesn't communicate to that realtor, do you understand? Has a deal ever fall through? Anybody know what I'm talking about? Or are you trying to sell a property and there's some confusion? You said you're going to give me a washer and dryer. Well, that's what the realtor said. Okay. That happens with a banker too, because you have a relationship with the banker, but then they're representing you in the underwriting process in that board meeting or the committee meeting, or depending on how that. So you want to make sure that you're clear in what you do, how you do it, what's your backup plan. Say if it doesn't work out, I wouldn't come out with this stuff, but I would be prepared to say these things. Okay, and always have objections ready. What's your plan? What's your goals? What does it look like? Do you have a bookkeeper? Do you have an attorney? Who are those people? Can you write that down right now? Can you write down a bookkeeper? Do you have a bookkeeper? No. So you need to find a bookkeeper. Even if you don't hire that person, who's the most? There's Alan Switzer is a Rose Taylor. These are 2 common bookkeepers for who? For the real estate people. They're around everywhere, right? Do you have a book? Alan Switzer, any of those guys? Okay. So they if you don't have this information prepared, what is it going to look like in a relationship? And the best thing you can ever do is like if you had a credibility kit and you have letters of reference from these people. If you're brand new and never did a house before, you can get money. You just the way you present yourself and the ability to do it. All right. Any questions? All right. Let's recap here. Business loans are different than commercial loans. They are kind of the same. But there's portfolio loans is a way of commercial money, and then you have personal money and personal loans. Okay? We all got that? And then you always should be sourcing money. Sourcing money in this room, who has money? You never know. Always be asking what bank, and banks change all the time. That bank I was telling you about earlier, it's a great bank if you need commercial, but it's Great Nations Bank in Norman. They're a small bank. I think they're like a $50 million bank. I've been working with them for over 10 years. And they only want to do bigger refis now. Before you could do single, one-off acquisitions, and now I talked to her. I had lunch with her not too long ago, and she's like, "Do you know anyone that's in apartments or in commercial? They want to bulk up their book of business faster than doing $100,000 loans." So you just need to know who's sourcing money, where and when and how. All right. Any questions? Yes, dear.
If you're going to consider bank financing, what is the most efficient way to start interviewing the multitude of banks that you see out in the market?
Well, first thing I do, I get a spreadsheet and kind of keep track of all the banks that are out there. So I just mentioned there's First Liberty Bank, there's Great Nations Bank, there's McLean Bank, there's First Security Bank, there's All American Bank, Citizens Bank, right? You borrow from Citizens. Bank First in Yukon.
Specifically, yeah.
That's very rare. Bank First is a very difficult bank. Not a negative, but they're an SBA bank. They do big $1 million loans. I mean, I have a great line of credit with Bank First. Very happy with that because it automatically converts over. We can talk about line of credit some other day, but we'll do that another time. But I think Bank First has the best line of credit out there. They don't charge you any fees. It's quick. I don't know. There's some other banks. Any other banks out there that you guys deal with?
United, are they still?
First United.
I use them quite a bit as well.
Yeah, I have a bunch of loans with them. I don't know. My loan officer is no longer there, so it's just like it's just. And when you have to build a relationship with a new bank, it's just difficult. And some people don't like certain type of houses, and
And a new loan officer is just like building a new
relationship.
A new
I follow
relationship
my
building.
bankers. Oh, you're over here. Okay, let's start. Let's start it up again. Oh, what do you need? Because I'm going to use the same documents all the way across the board.
Have you used Valor Bank in Edmond?
The big one, there's one on Northwest Expressway is Valor Bank too, right?
I'm not sure. I've only got
Alliance.
Alliance. Nope, I haven't heard of them. Bank 7 used to be real popular there at one time. It's interesting. I think a lot of banks, small banks, I look at how the bigger the asset class. If they're 250 million and below, that's the banks I like to work with. But like Regions Bank, they're a $1 billion bank. They're mom and pop, and you can talk to that guy, and he leads a breakfast and stuff. He's a great guy. With those type of bankers, you're going to have your ducks in a row, right? The real $50 million banks, like the Great Nations Bank, First Security Bank, they're going to hold your hand. They need to loan you money because that's how they make money. But the bigger banks like Bank First, Mid First, they don't care. They don't care about you. No offense. But you're so small, and we're so 50,000, 100,000, $1 million. This banker I met the other day, I only write 2 million and above. Okay, buddy. Good for you, 2 million. See ya. Well, I can bring I can do my whole portfolio or half my portfolio with you or a quarter. But it's interesting because there's just different levels of banks. So you got to get with if you're new, you got to get with the banks that are gonna kind of underwrite you and walk you through the process. You need to know what a financial statement is. You need to have it ready to roll. You need to have your tax returns. You need to understand your tax returns. How does it work? And you need to kind of understand depreciation and these minor things that you need to know. Any other questions? Any other comments? No?
Go through those couple banks again. I didn't get all that you said.
You can listen to it on the
Rattle
podcast,
them
homie. It's
off so
recorded.
fast, I didn't get them all.
First Security Bank, Great Nations Bank, First Liberty Bank, First United, Bank First, Yukon, Citizens Bank, All American Bank, McLean Bank. It's one of my favorite banks.
They bumped my rate.
McLean Bank?
So we hit the 5-year mark, and we were at 6.5, and they renewed at 6 3/4. And I was not happy with them, but it didn't make any sense to take it somewhere else. It just
I think a quarter is real slow.
yeah, but
a whole point. I've seen
5.5.
Yeah.
So.
Well, you can also threaten a bank to move too. I mean, it's just be prepared. They'll call you bluff, and it's happened to me. Because I thought I was somebody cool, and they're like, okay, But I did. I was pissed the way they were handling the renewal. I was like, oh, okay, 2 G's, because it was like 10 loans. I was like, oh, okay. Well, you saving me money, homie. I'm gonna go somewhere else. So, what else? Any comments? Anybody any problems with any banks? Any banks that you like?
I already told you all the banks I like.
We just like to hear you. We just like to see the beard move.
A loan officer at Oklahoma's Credit Union.
That's a bank that I use too.
Yeah, and he's been really.
Brian, is it Brian?
Suffield.
No, it's another Brian I have over there.
Something Suffield.
I just had lunch with him yesterday. Credit unions are really good too, but they can change. But credit unions they're very attractive, and I've had great success with credit unions. I was with Allegiance Credit Union. I think I got like one more loan. I've been with them for about 10 or 15 years. But then they changed, and then we don't do commercial loans anymore. They never did them before, and then they just one day decided to have a commercial department. I got wind of it. Someone referred me over there. I got in, wrote $1 million over there. 5 years later, I'm trying to renew, and they're like, oh, we don't do this anymore. So I had to find to park this money somewhere else.
Yeah, that happened to us in Falls. We were using our credit union there.
Yeah, so
They were
credit unions
great,
could be
but
good,
then-
but then I don't know if that was a credit union. That was another bank. I don't want to mention that bank. But I got burned on a bank where they were like, yeah, we'll do it. And then, yeah, where are you? They disappeared on me. So I always, I approach 3 banks. when I do it. I go with my ace in the hole bank. I kind of just verbally, hey, I'm looking at this. Here's the address. This is what I have on a contract. Is this something that you want to write on? Is this in your pipeline? Can you get this done? They usually say, and I have an intimate relationship with that bank. And then we kind of go over what my line of credit is, or we go over what my guidance line is. And then I'll try to go a new bank, and then I'll go with another bank, and I'll just go with 2 banks, and then I have that third bank on the side, just in case something goes wrong. They start whipping out fees and start doing all kinds of craziness. And the larger the deal, I do that too. But, I usually always have 2 banks that I'm working with at all times. And I'll like one time, this building specifically, I contacted 2 banks and submitted both loan applications, both at the same time. One was kind of like, what are you going to do with the building? The other one's, okay, yes, let me look at your financials, and everything is going well. And then the other one, he said that he was having some internal issues, like they were changing management. So it was like, hey, we could still do it, we want to do it. I closed this deal 2 weeks later. Okay, we're ready. I'm like, buddy, I already closed it and moved on. So listen, this is your job, this is your game, this is a profession. This is what you need to do. So if I was waiting on that guy, I could have lost this deal. This deal had to close by December 1st. So I'm not going to play any games. This is life and death out here. This is a real deal. Okay, put your hands together.
Broke? Just tired of making chump change? Learn how to improve your income and build wealth with real estate investing. Investor Weekend is here to help you do just that. Join us for a powerful, knowledge-packed weekend that is bound to enlarge your real estate investments. What can you expect to get from the Investor Weekend? Hear great national and local real estate investors. Learn how to buy rental property, build wealth, and connect with other like-minded people for funding, partnerships, and even hot deals. Whether you're a seasoned investor or never purchased a property before, you don't want to miss the Investor Weekend. Right now, only $98. Go to www.investorweekend.com now to register or to find out more.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at SavvyRadioShow.com. Connect on Twitter @LandlordBook and always be buying assets.